The China trade in full focus Wednesday as Didi, China's answer to Uber, goes public on the New York Stock Exchange. That stock soaring in its debut, valuing the company nearly $80 billion. But while 2021 has been a good year for IPOs, Chinese investments overall are struggling. The FXI China Large Cap ETF falling to hold on to a gain for the year as regulators there crack down on big tech. Does Didi's debut signal opportunity, or could there be more pain ahead? I'm joined by Quint Tatro of Jewel Financial and Bill Baruch of Blue Line Capital. And Quint, I'll start with you. Typically the prominent thesis behind investing in China is growth and a rising consumer class, middle class in China. But these technology companies, they haven't been a great trade here in 2021.
Yeah, certainly. It's been a struggle, Seema. It's disappointing. We've been long the FXI for some time now, and after an unbelievable end of the year in 2020 with thoughts of a looser, administrative policy with the new president, et cetera, I think investors got a little ahead of themselves. That being said, I think this is really an interesting area to consider going into the second half of the year, and we've actually been adding to our position. If you take a run through, there's some interesting names in there, but from a macro perspective, we see manufacturing coming back online. We see global kind of resurgence of the consumer, and I think that's going to help China. And again, looking at the biggest component of the FXI, which is Alibaba, this is a company that's down considerably from their highs and now trading basically at par with their growth values. So ultimately, I think we see some value in some growth names here, and it's an area to consider for the portfolio for sure.
With that in mind, Bill, what is the best way to play China?
Well, the FXI ETF is a good way to look at getting a broad exposure in these large caps. And Quint's right. We've seen this big swoon since the February peak. The market itself, these stocks themselves got ahead of them, and they've come in quite a bit. There's good value down here. A couple of components I'm looking at, though, is the fact that February peaked, and then you had a little bit of a bounce in May where this ETF as well peaked, and that sort of aligned with the Chinese yuan strengthening against the U.S. dollar and then peaking out and falling itself. So I do think the U.S. dollar is going to weaken against the yuan here in the second half of the year. So that should bring a tailwind to these. And then Quint mentioned BABA. It's the largest holding in that ETF. And I think that BABA is a really good area right now because it's coming off of a trend line going back to 2018. That itself exudes some momentum and exudes some emotion within the space, and it will be a leader. Overall, though, there's a very great chart pattern in FXCI, an inverted head and shoulders. It's already come out of that, and I think that could bring some additional tailwinds. That inverted head shoulder is a very bullish pattern. But you cannot ignore 48 bucks. 48 bucks is definitely some resistance. If we get above there, you also don't want to forget about the $55 peak too. So there is definitely overhead resistance.
Good chart there.